Right, hello everyone, it's Julian Crypto. Today I'll present you to a quick history of Bitcoin, which is very interesting, so let's get started. The year 2008, October 31, none other than Satoshi Nakamoto, whose identity remains unknown, created Bitcoin. He circulated his white paper titled A Peer-to-Peer Electronic Cash System through his email list, and thus history was made. On May 22, 2010, the first ever Bitcoin transaction took place. 10,000 Bitcoin were exchanged for 2 large pizzas. Thankfully, it was 2 large pizzas. I think whoever made that purchase must feel full even today. As of June 7, 2011, Bitcoin was priced at $29 and WikiLeaks decided to accept donations in Bitcoin. This marked a local peak in the currency price, something we'll discuss more later. Bitcoin then declined in value, while money supply in the United States rose by 4.5%, and at its lowest Bitcoin was worth only $2. Then came Bitcoin Savings and Trust, which sounded legit, right? It turned out to be a Ponzi scheme offering a whopping 7% weekly returns. Eventually, they stole 5,000 bitcoins. After the first halving, when the miners rewarded dropped from 50 bitcoins to 25, Bitcoin was valued around $10. Historically, halvings have had a significant impact, causing the currency price to rise dramatically. In this case, the price has surged to $289. Then came the first Bitcoin ATM, followed by the FBI confiscating 26,000 bitcoins from Silk Road. Bitcoin lost 34% in just one day, but recovered quickly. Then on November 29, 2013, when Bitcoin reached nearly $1,200, China decided to ban cryptocurrency transactions for banks, ushering in a long bear market. As it turned out, the largest cryptocurrency exchange, which accounted for 70% of crypto trading, was hacked. They first suspended withdrawals. Later, we learned that they have been missing a large amounts of Bitcoin, and the exchange was called Mt. Gox. Bitcoin plumped to $163. After that, the Lightning Network white paper was released. Bitcoin developers worked to enable dynamic and virtual instant, cost-free transactions on a layer 2 of Bitcoin's protocol. Japan legalizes Bitcoin, leading to a more significant surge in its price. Following this, tremendous emotions unfold and people start betting on price increases on exchanges. This is evident in the funding rates, a metric that shows investors' sentiment. And on a price correction, Bitcoin costs only $615. Then comes the second Bitcoin halving. The reward for mining a block drops from 25 bitcoins to 12.5 bitcoins. The halving events decrease the supply of bitcoins entering the market, and historically, they have had a significant upward impact on the price. Bitcoin experienced substantial growth following the second halving. This period also saw the first typical fork of Bitcoin, Bitcoin Cash. However, Bitcoin did not lose value, while Bitcoin Cash lost 94% of its value compared to Bitcoin since its inception. Amidst the price surge, new leaks that China plans to shut down all cryptocurrency exchanges, triggering a market decline shortly after Jamie Dimon, the CEO of JP Morgan, one of the largest banks, stated, "Don't ask me to short it. It could be at $20,000 before this happens, but it will eventually blow up." He also calls Bitcoin a fraud. 7 days later, Bitcoin drops 35% but recovers quickly. Another fork, Bitcoin Gold, is even more unsuccessful than Bitcoin Cash, losing 98% of its value compared to the original Bitcoin. And finally, on its peak on December 17, 2017, Bitcoin was worth nearly $20,000. Interestingly, this peak coincides with the significant event, the introduction of Bitcoin futures on Chicago Mercantile Exchange. This becomes a critical moment for investors' sentiment, the highest emotions at the most crucial event mark the best time to sell an overvalued asset. Interestingly, long-term hodlers decided to sell Bitcoin at the ideal moment, initiating a downwards cycle. Subsequently, the CoinCheck exchange is hacked, costing a staggering $532 million and causing Bitcoin to plunge by 65% within 30 days. And the situation could have stabilized there, but the S&P 500 index then falls by 8%, causing minor declines in Bitcoin's value. However, these declines soon amplified to a staggering minus 50% within 32 days. Interestingly, the lowest price for Bitcoin perfectly aligns with the highest interest rates, making the most expensive dollar and the cheapest Bitcoin. Another moment when Bitcoin hit rock bottom coincided with a return of these interest rates to their earlier levels. Coinbase investors decide to buy during the price increases, and at the local top, Bitcoin priced at nearly $13,000. Long-term holders also deciding to sell. After that, Bitcoin drops by 49% over 174 days, and perhaps that's where it would have ended. Maybe from that point on, Bitcoin would have only increased if not COVID-19, with recommendations to wear masks and stay at home. Long-term hodlers decided to sell following news about the spread of the deadly virus. And after that, Bitcoin falls by 63% in just 42 days. Interestingly, the lowest price point correlates almost perfectly with the lowest market sentiment, the most significant fear in the cryptocurrency market. This is evident in the funding rates metric, showing whether futures traders are betting on increases or decreases of the Bitcoin price. Imagine if everyone is betting on a decrease, if everyone believes the asset will be cheaper tomorrow. It means everyone has already sold. If everyone has sold, there is no one left to sell. Therefore, the price can't drop any further. So isn't such a moment the best time to buy an asset that can't fall anymore because everyone has already sold? That's exactly the kind of moment we look for in the market. During this time, Michael Saylor, the founder of MicroStrategy, buys Bitcoins worth $250 million. And in the next 3 months, the US dollar supply has increased by 15%, which is bound to positively impact Bitcoin's value. Bitcoin is priced at around $8,000 and the mining reward drops from 12.5 to just over 6 Bitcoins per block. And for the third time, Bitcoin halving causes a significant price increases. If everyone believes that a particular asset will be more expensive tomorrow, it means everyone has already bought. Therefore, isn't this the best moment to sell an overvaluated asset? And again, emotions of the market we are able to analyze observing funding rate metrics, which is showing the real emotions of traders. Bitcoin is rising and the traders on Coinbase accumulating gains. More flow of stablecoins into exchanges, and Tesla begins to accept Bitcoin. Shortly after, Bitcoin rises from $42,000 to $48,000, reaching its first peak in 2021. A massive influx of Bitcoins onto exchanges triggers the initial price drop. Interestingly, subsequent peaks in 2021 were also preceded by an inflow of Bitcoins onto exchanges. Logically, it makes sense that if the price is high, it's a good time to liquidate some assets. In this case, Bitcoin investors transferred their holdings from their hardware wallets to exchanges. The reserve of Bitcoins on exchanges increased, which preceded price drops. This is understandable. If there is a surplus of an asset and that asset suddenly gets sold, the price is likely to fall. To understand this better, MaxData emerged. Back then, still under the name Maximus Group, They analyzed 600,000 Bitcoin blocks to check how the average price of Bitcoin changed within 26 hours, following only a 1.5% increase in the number of Bitcoins in exchange wallets. In 2017, out of over 1,500 such events, the average price dropped by 0.5%. In 2018, there were 350 events and the average price drop was just under 2%. In 2020, there were 29 such spikes in reserve and the average price dropped by nearly 3%. And once again, the reserve of Bitcoins peaks at the top, which I just mentioned. It drops by 17%. Elon Musk tweets that you can now buy a Tesla with Bitcoin. And the peak for Bitcoin was on April 13, 2021, when it cost almost $65,000. This perfectly correlates with one of the most significant events, the second largest cryptocurrency exchange going public on one of the world's biggest stock exchanges, Nasdaq, also known as the Coinbase IPO. Again, a culminating point with the highest emotions and the highest price. Aren't these some of the best moments to sell overvaluated assets when everyone believes they will rise and there's no one left to buy? And before the final drop, as I mentioned a moment ago, the reserve of Bitcoins on exchanges rises once again. But interestingly, these Bitcoins are moved to exchanges even before Elon Musk announced that Tesla would stop accepting payments in Bitcoin. Maximus Group exited Bitcoin even before the tweet based on-chain data analysis. After that, Bitcoin drops by 48% in just 8 days. And at the bottom, of course, there are several interesting events, the influx of stablecoins onto exchanges and Bitcoin trending towards $28,000. Also, Elon Musk speaks positively about Bitcoin at the B World Conference. This again reverses the trend, this time to an upward trajectory, and for the next few weeks the market is focused on the next crucial event. El Salvador legalizes Bitcoin. At the local peak, emotions are the highest, making it the perfect time to sell your overvaluated asset. Then China illegalizes Bitcoin and long-term holders promptly sell off. Cryptocurrency loses value but later rebounds as the number of stablecoins on exchanges increase. At the peak, there's another surge of positively emotions, an inflow Bitcoins onto exchanges and sales from long-term holders. Interestingly, from a technical analysis standpoint, the peak at $69,000 was a peak of a bull market. However, according to on-chain analysis, the bull market peak actually occurred in the spring. Why? Because both the largest sell-offs from long-term holders and from miners, as well as the most significant emotional swings in futures markets, happened in the spring of 2021. Based on on-chain data, MaxData then suggested the first price correction. Bitcoin falls by as much as 52% over 75 days, and this is the period when people begin talking about upcoming higher interest rates. Bitcoin's declines are countered by massive increases in the number of stablecoins on exchanges. In other words, capital is being transferred to exchanges when the price is very low. If someone is transferring capital, they might want to buy something with it. That's why price declines are likely to halt and the price may rise. Russia attacking Ukraine right before the price flew brings to the mind the words of Baron Rothschild. Buy when there's blood in the street, even if the blood is your own. Buy on the sound of cannons. Sell on the sound of trumpets. And again, on the local peak, the long-term hodlers were selling. After that, another very important event. The Central African Republic legalizes Bitcoin as legal tender. But right after, the first MaxData.app related to algorithmic stablecoin on Luna, followed by Luna's creator Do Kwon being forced to sell off bitcoins that were held as collateral for that algorithm. Well, some might say that someone accidentally created a financial pyramid. Then investors on Coinbase buy Bitcoin at the perfect local low. Bitcoin recovers, but then another very negative event occurs. A crypto lender Celsius network freezes Bitcoin withdrawals, causing another price drop to around $20,000. On the local peak, we have a report from Tesla stating that they sold 75% of their Bitcoin holdings. Bitcoin loses several percentage points, followed by another increase in interest rates and a surge in Bitcoin on spot exchanges. The price of Bitcoin falls by over 20%. And perhaps that $20,000 level would have been the bottom, if not for another dramatic event. And just days before this event, bitcoins were systematically being transferred to spot exchanges, something which MaxData users were regularly informed about. Right before a massive problem emerges with one of the largest cryptocurrency exchanges, FTX, which freezes withdrawals and turns out to be insolvent. Here, customer funds were likely stolen, probably used by Sam Bankman-Fried and its friends from Alameda Research to leverage trades. When Bitcoin is falling, investors on Coinbase accumulate at the through below $16,000. The lowest emotions also appear among traders in the futures market. And at the moment everyone thinks that Bitcoin will reach 20,000, 10,000 or even less, it turns out to be the best time to buy Bitcoin. As everyone believes the asset will decline, there's no one left to sell. Stablecoins flow into exchanges and Bitcoin is at historic support relative to S&P 500. Again, we regularly communicate this on MaxData Twitter. And Joe Biden, the President of the United States, signing a bill stating that the US will spend over $1.7 trillion, and that means that the supply of dollars in the United States will increase again. The dollar will fall, and Bitcoin? Well, Bitcoin will have another chance to rise. This information also appears on MaxData.app Twitter, along with analysis based on data such as Bitcoin supply on exchanges, stablecoins, supply on exchanges, net unrealized profit and loss, and Bitcoin price, which surprisingly precisely indicated in 2019, 2020 and 2022 nearly the best moments to accumulate Bitcoin. On the peak, the Fed raises interest rates by 25 basis points, then at the local peak, the higher emotions appear again, and banks like Silicon Valley Bank, Signature Bank and First Republic Bank turn out to be insolvent. And one of these banks holds 7% of the collateral for USDC, which is known as a Coinbase stablecoin. Bitcoin loses value and negative funding rates appear again on the decline. And at this point, an anomaly occurs. It's not investors on Coinbase who are buying, but traders on Binance. And on the next rise, miners are once selling, which could suggest a price correction. The price does indeed correct shortly afterward, and then the supply of stablecoins on exchanges increases by 7%, and it almost perfectly correlates with Bitcoin's local low. Again, MaxData.app is sharing on Twitter a huge opportunity to buy Bitcoin caused by big depeg of stablecoin called Tether. Just after that, Bitcoin recovers and the collapse of one of the China's largest developers Evergrande triggers another price drop in Bitcoin. And again, MaxData.app users are informed of the risk even before the declines occur. Phone alert called CallerBot rings in their phones warning about the risk associated with Bitcoin supply. Bitcoin drops by 10% within 4 hours. Several really important events are ahead of us. After every historic Bitcoin halving, the price has always gone up. The lowering of the interest rates in 2020 also favored growth and the opportunity for large institutions to invest in Bitcoin through ETFs in the United States. So let me ask you one question. If most likely the entire market will believe that Bitcoin has to rise after these events, shouldn't we consider the second quarter of 2024 as a potential local peak? The points of highest emotions, moments when 99% of the market believes that Bitcoin will rise, are therefore the best moments to realize previously occurred profits. Of course, this is just my speculation. This is not investment advice. I wish you all a successful year and may the bull market be with you. Of course, this is the first summary of Bitcoin history. Let me know in the comments which additional events you'd like me to include in the next video. I made this presentation based on data from MaxData.app. And if you go to the Charts tab, enter Bitcoin Full History, you'll find all these events added there and even more. Have a great day. Cheers.